So when is it going to be time to flip short? We have taken a bunch of longs. I have closed everything out, and I'm now looking at what the potential warning signs may be of when it could be time to start to be more defensive and cautious within this very generous market over the last couple of days. So without further ado, let's get straight into it. I wanted to start off with this chart over here, which is the Bitcoin estimated leverage ratio of all exchanges, essentially showing what could be the primary driver of the price action. And if you have a look at the blue over here, the blue is essentially the leverage ratio, and the black is the price grinding towards the downside. And you can see price has kind of flattened out. As we know, it's been stuck within this major range for a number of months, pretty much since June, with the bottom of that range being around that $18,000 level. And ever since, you have that leverage ratio continuing to grind towards the upside over there. And that, of course, signifies that the next major move is closer than it was yesterday. The longer this goes up, the closer and closer we get, because eventually there is going to be a leverage reset and somebody is going to get liquidated. And the question is it going to be the longs or the shorts? That is the $1 million question. And if you look at this tweet over here by Crypto Poseidon, he says, this time is clearly different, but you don't want to see it. And this is definitely the case in crypto. If you have a look at the 2019 bottom, what he's alluding to over here is the decline in volume. So yes, the market begins to get quite boring when you start to near these bottoms, but you want to see the volume go down with that, and then you have a massive inflow of new volume, and that would initiate the start of the next run. And you can have a look in 2020, same thing, declining volume. In 2021, when we had that major sell-off into June, same thing, declining volume. And now we're consolidating at the bottom of the range with rising leverage ratio, increase in volume, and that signifies that most likely, he says here, that volume needs to decrease while bottom accumulation, but this time the volume is increasing, which means that the bottom is not in. And when you look at a bunch of other charts over here, I haven't put on all these different moving averages for quite some time. I wanted to take a look on the weekly chart for Bitcoin at the slopes of those moving averages, because this is important in determining the long-term health of a particular chart or asset class. And one important thing that I noticed, if you look over here, the white 200 exponential moving average, I believe for the first time ever, has started to officially roll over. It's angled downwards, and this is not typically a good sign. 21 is crossed below the 200, and then you'll notice over here you have the purple moving average, which is the 200 over here, and the upper Bollinger Band is now it's inevitably going to cross. It is going to cross below that 200 moving average. That is also something that is worrisome for the long-term health. And then the 255, as you would know, we've been stuck below that for quite a long time. One good thing, though, is the upper Bollinger Band is continuing to increase. It's now come all the way up to $17,556. And when price reacts into that zone, I do expect some sort of at least a little bit of a bounce or demand from that level. If it gets completely lost, then of course you can push entirely through in the same way that you did over here on what looked like a capitulation candle all the way back in June. So very interesting times. This continues to be the chart that I watch most closely, waiting for some sort of a reaction from that Bitcoin volatility divided by the VIX, which is the bottom band chart over here. I want to see the shoot back in, and then this will give us the directional bias. We'll have a look at what the trend is on price as this volatility expands. I'm okay, as mentioned yesterday, to miss out on a little bit of the move. Everything right now is very defensive, and I'm being cautious on my long-term plays. Somebody asked me yesterday on Twitter what percentage of my total portfolio that I'm allocating towards the trading competition, and the answer to that is extremely little. It's about 0.1%, if that even. So I am 99.9% or more in Tether, in stable coins at the moment. So definitely haven't entered any major long-term long positions. I will 100% let you guys know when I do decide to do that. And I wanted to quickly touch on this thread over here, which may initially seem like something bullish, but stay tuned because there's more to it than meets the eye. And it's Dylan Leclerc. He says here is a super interesting Bitcoin chart. And then he puts in inverted commas there, seller exhaustion, constant, multiplies the percentage of Bitcoin circulating supply and profit by the trailing 30-day volatility to identify potential bottoms. And he says low profitability plus very low volatility equals local seller exhaustion. So basically, according to this chart over here, pretty much we add an area where you get local seller exhaustion. Now, when you delve a little bit further into the street, you'll realize that that doesn't mean that the ultimate bottom is in yet. And yes, in the long term, if your time horizon is 12 to 18 months, probably a very good time to dollar cost average. Look at the dollar cost average calculator, Bitcoin dollar cost average calculator, Ethereum dollar cost average calculator, and play around with that. As I've told you guys before, you get absolutely phenomenal results. And most of you will probably outperform yourself as a trader if you do use that strategy. So yes, time horizon of 12 to 18 months, probably not a bad time. But when you get into it, he says the last 2 times that the indicator flashed was July 2020. Bitcoin was at 9K. As you know, we went all the way down from there to, I think, about $3,800. And then you have November 2018. It was at 6K. As you would also know, we went all the way down in half from there to about $3,000. So he says opposite outcomes for both. Whatever way Bitcoin breaks, it's likely to be violent. As touched on this weekend, the 2018 parallel is definitely applicable from the mining point of view. Let's wait and see. And what he said about that mining point of view is said there's 2 scenarios. Scenario 1, this is the bottom. The lack of volume shows apathy from sellers, extended consolidation accumulation period. And then he says, number 2, we are at the 6K level in the $18,000 to $19,000 region, meaning that obviously if you go down 50%, that's around the 10 to 12K. Hash rate continues to soar, increasing pressure on miners until the ultimate puke. So hash rate moving. And then he says, see the hash rate moving averages. And he says he leans towards number 2. I do as well, because purely from a technical analysis perspective, everything is still in a major downtrend with a lot of pressure. And he says, while it is true that sellers could be locally exhausted, the reality is there aren't that many large buyers on the tape either currently. And he says strong support of limit buyers at 18 to 19,000 with plenty of limit sellers at 20 to 21,000. We could just pinball in this range for weeks to months. And I tend to agree. I don't think from here, he made that post 17 hours ago. I don't think months. I think maximum weeks. And I think we break this range. Mathematically, there will be an expansion. You can't continue too much longer. You can see that, as mentioned on the 3-day chart, we did break the top side of the parallel channel, which was a downward parallel channel. And I've now moved the price over to the next level of where it would meet resistance using this diagonal. And that comes in at about 19,600. So a lot of people are looking for a spike to about 20,500, 21,000. I've seen a lot of the big trading Twitter accounts like Al Capo and them calling for that spike first. I'm not so sold on that. I think that there is a potential that maybe 19.6, maybe 20K at the most, but I don't even know if we're going to get to 20,500. We'll take it as it comes. If it does get there, though, there will definitely be a short opportunity. And as the thumbnail suggests, I think that could be this week. And the reason being is all because of the earnings reports, as you can see by the pattern of this chart over here as well. You do still have a descending triangle, and we've pretty much reach the ultimate apex of that triangle. If you look over here, it literally can't go on much longer. We're getting to the point and the apex, and there will be a break. Most of the time, they break between 65 and 75% of the way through. And you can look on this over here. This is called the pattern site, the patternsite.com. If you ever want to go and look at the probabilities of things breaking, they have all the different patterns on here. They have different candlesticks, psychology. It's a very useful resource. Call it your encyclopedia for trading. According to that, there would be about a 75% of the way through that triangle is usually when you'd break, and we already seem to be further through, which means that we're on a knife's edge. It's very, very close. If you look at what Mac 10 says over here regarding the stock market as well, he says we are back to being fully overbought. When you use the S&P 500 oscillator, it's already nearing all-time highs. And when you tie that in with what the actual chart is saying, which I want to quickly do over here, let's just quickly load that. Have a look. This would be your next primary area of resistance. I don't even know if we'll make it into that gray box. We've pretty much already tapped the liquidity that resides over here. This is in the equity markets at least, a very easy risk to reward ratio on a short. You could literally have your stop loss a tiny tick above those wicks, and then you'd be looking for this as a next lower high area and a rejection from this zone, and then you're going to be looking for lower prices. So I'm keeping a keen eye on that over here. And then another thing I wanted to point out by Crypto Poseidon is expecting some consolidation and a retest of the EMA 55, a rising trend line over here. And then he says the big boy needs to rest before the new up-only mode, and he is talking about the DEXY, and this trend line over here is the same one that I see. He's got the 55, which is coming in only a little bit lower than where current price action is. As you can see, he has this downward channel, and then he shows a breakout from that level. So let's pull up the DEXY. What would that look like in real time? In real time, you would have something like this. The gray box over here outlined, you want to see if you're a dollar bull, you want to see this level get held, assuming that it came down over the next couple of days. You're looking at in the region of about 109 to about 110. So I'll extend this box out like that. This box needs to hold for the bullish case to continue. As soon as you break that level down below 108, then it's fully risk on. Basically, the dollar bull run is probably going to be over. But with that being said, there are some red flags. And the red flags are for the equities. Looking at the 30-year yield, it's absolutely pumping still. 10-year had a small pullback. It looked like a complete rejection from that zone. And now it seems to be consolidating on the top. Now, what typically happens is if this price starts to, or at least the percentage over here on the 10-year yield, grinds out against this area over here, it probably will spike through to the top side of the resistance box. So we'll be keeping an eye on this. Too soon to be calling any sort of a macro reversal, as I have mentioned before. NASDAQ, I also wanted to touch on, came straight into its resistance zone, which we mentioned yesterday, and I do expect a rejection from the zone. So you can see we're nearing potentially the end of what would be this little relief rally, or the small bounce that we've had in altcoins. Now is definitely the time where you need to be defensive. And I don't know how many more days it could continue on, the little relief rally, maybe a couple more, but sometime I think during this week is when you need to exercise caution. And that's why all the trades that I'm taking are very short term. Any longs that I'm taking are short term. And I'll continue to look for good setups. There are altcoins which are still holding their uptrends, but I do anticipate that the move down will be very, very violent when it does occur. So what about Bitcoin? Bitcoin on the daily, Bear Moon should be printing today. I don't know how or why it works, but it does. Stuck below all the important moving averages over here. So technically, risk continues to remain to the downside. Now, the one difference over here with this chart, let's just clean this up a bit. I'll turn that off. Okay, the gray box over here was a prior area of resistance that we were watching. I believe this chart, this box can now once again be moved down for a new level to be cleared, which is going to be this zone over here. So if price can get above and reclaim on a closing basis, meaning you have to have multiple daily closes above the gray box, which would be, let's round it up to about 20,000, 18,800 to 20,000. Closing above that would start to switch my bias, and I'd be looking for longs. If you can hold this level over here, I'll be looking for longs, stops below, and then targeting higher prices around 23, 25, and then at a much later stage, even that CME gap at 28. But for now, easy risk to reward ratio, any spike into the box, short stops above, and you're looking for low prices. So keep it simple. With that being said, if you want to sharpen your skills, again, have a look in the description below for the trading competition. Also join the Discord, because that's where I drop most of the trades. there's a big difference between, this YouTube analysis when I give you guys my general thoughts that could play out over days to weeks, and then actual real-time trading. So, for example, I'm more bearish in the mid to long term. Let's not say long term. Long term's too long. Mid-term, I'm bearish, but in the short term, I have been getting long trades. So if you do want to join that, click on the link below. It will take you to a competition page like this, and you'll have to use one of the links if you want to win. You can still participate. So there's my ranking. I'm 21. I've made 47% profit. The top guy's got 475, and he's expected to win $10,000. This competition is a great one because the previous one was 2 weeks, which I think doesn't really reflect your true trading potential, because that's not really how people trade. Like, try and make as much money as you can in 2 weeks. It's more for the long haul. And we've extended the competition till the end of November, so call it the beginning of December. So it really gives you time to implement your proper trading strategies and not FOMO in and rush into trades unnecessarily, which I definitely forced a lot in the last competition. And I think I only came like position 100 or 120 or something, which is not that good for the guy that's on YouTube here showing you what to do with your trade. So this is definitely a more respectable number, and I'll look to try and put this account into multiple hundreds of percentage gains. And you can follow along. You're welcome to follow my trades. I am putting every single one in the Discord group. So again, for the Discord, the link is below over here. You'll have to join into the VIP section. And in order to do that, use one of the sign-up links below. So you can use my BITGET link, you can use the BYBIT link, or the OKX link. Those are the ones that will give you access into the Discord. All right, moving on. I saw this tweet over here from Cheds, and this is now talking to the low time frame traders. He says, yeah, MATIC flirting with a double negative OBV, bear divergence, as you can see it over there. I said that MATIC was one that I was looking at. Let's click on MATIC over here. So MATIC, I told you, was one that I'd be interested in taking a trade on, but only when it neared the range high, and it is getting close. So if I see a spike into that zone, I'm going to be looking for a short. Already now, even I'm going to start to look for weakness anywhere within this zone, and then I'll be looking to capitalize on a short trade. Let me move it on to a 4-hour for you. So still in no man's land. I need to see one more push into this area just below $1, anywhere around 95 to $1. And that is the zone to short from, anticipating that this range is going to continue to play out for some time. So near was the one that we were trading yesterday, and we had a lot of good trades. Remember, you had the big range and then the small ranges on the bottom over here. Let's go into a low time frame to show you what happened. I did close my trades, as I did mention in the Discord, and the reason being is because I'm more in capital preservation mode, and I'm taking quick trades. So scalp trades in, out. I'm trading for like an hour, 2 hours a day. And then when I go to sleep, I want all those positions closed. So if you're trading it as a swing trader, though, holding it for a longer period of time, you do still have higher highs and higher lows. Well, the higher highs are actually starting to fade off here, but you are defending the higher lows. So nevertheless, you could be bidding every high low with a stop below the next one. But this trade's over, so I will be deleting that. I just wanted to do it live on the show. I'll reanalyze if there's a new opportunity to jump into that. Cardano, I mentioned yesterday as well, breaking back into its range. You are same thing as near, looking to bid every higher low with a stop below the previous one, ultimately targeting the top of this range. And if it breaks through that, then you can start to look at much higher prices. EOS was one that we had before. If it comes back in towards the main trend line over here, I would potentially be interested in rebidding on this one. But so far, nothing there yet. This was the long trade. Swing traders, again, would still be active. Of course, you'd move your stop loss into break even now. I think that's about it, guys. I'll look for clean setups later. I don't want to harp on to random altcoins, taking you through a boring show. I've said what's most important, which is that pressure remains to the downside on Bitcoin. Bitcoin's holding a descending triangle, has a high probability of breaking to the downside. The measured move of that would be anywhere between about $12,000 and $14,000. You can see grinding up against resistance over here, failing to flip it on the 4-hour chart. Volatility is extremely low. And patience is the name of the game. Protect your profits. If you've made profits with me over the last couple of days, keep those tucked away nice and safe and wait for the next most obvious trade, of which I will drop in the Discord. If you do enjoy these videos, please do me a massive favor. Take 1 second out your day to give this video a like below. Hit the bell notification so you can be notified of when we do go live. And then subscribe to the channel if you aren't subscribed already. And that is it from me, guys. Have an absolutely stellar day. And I will see you all on tomorrow's video. Cheers for now.